Okay. Hey, how's it going, everybody? Hey, if you're a trader, if you like to trade stocks, or you're basically actively involved in finding stocks, I have to ask you the question, what does your weekend look like? Are you spending your weekend doing this? Or, you can put in any picture you want. On the golf course, at the lake, taking care of things for your spouse. Are you doing this or are you doing something like that? I know as a trader, I've been trading for a living for a long time. I know you can get so lost into just looking for that absolute best stock you can find. And it's oftentimes after spending hours on a weekend searching for, just the perfect stock, I'd be so tired after going through, 100, 200, plus stock charts. I would be exhausted by the time the weekend, was over. And I tell you one thing, somebody in my family wasn't very happy with what I was doing. So I wanted to kind of put together a couple of things for us. One, today's tip is, how to simplify your routine. 5 ways to simplify your search for top growth stocks. I'm Dennis Wilborn. I am the Active Trend Trader, reminding everybody that, yes, all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So 5 simple ways to find the best growth stocks without spending hours searching on Saturday and Sunday. In other words, there's better things to do with your time. Number 1, stop searching for the next Amazon. Because one of the things, you're not going to know it's the next Amazon until it is actually the next Amazon. But we can do something for ourselves to kind of hone down and look. We want to focus on some high quality proven list of growth stocks. I think that IBD, Investor Business Daily, is one of the best provider of those, that kind of a list. They have the IBD 50, and then they have 12 other premium lists that you can go searching through. So that's step 1, because what that's going to do for you, it's going to put you in the lake where the big fish swim. There's a great picture of my sister-in-law and her 2 daughters. This is their first fishing trip in Alaska. This halibut you see right there weighed in over 250 pounds. And so, these kind of lists get you into where the big fish swim. However, they don't necessarily get you to the big fish yet. You need an experienced guide, or you become your own experienced guide. So now, once I've come down from a list of 13 watch lists that incorporates about 500 stocks, I want to fire at least 80% of those prospects. So how do I do that? Well, I've got some additional ways that I hone down my list, but I get it down from 606. Well, one, IBD gets it from 6,000 down to 500. Great, the best growth stocks, and then I do some additional whittling and get it down to a 100. But in reality, that's still too many. A lot of people think, oh my gosh, that they have this, when they start cutting down the size of their watch list, they have this huge FOMO event, a fear of missing out. And it reminds me of a story. I was coaching a lady who happened to be a psychologist, who, you'd think that a psychologist would have their trader psychology down pat, no issues there. But she had such a huge fear of missing out. I looked at what she was doing, because her complaint to me was very simple. I'm not taking the trades when the setups happen. And I asked her, how many stocks are you watching? She said, basically, well, I'm watching 50. And I said, well, I tell you what, Joanne, let's take your 50 stocks and let's cut that down to 10. We're only going to watch 10 stocks. She goes, no, I can't do that. I mean, she was adamant, no, I can't do that. The reason why, she goes, I'm afraid I may miss something. I may miss an opportunity if I cut down to just 10 stocks to watch, even though they're the best stocks to be watching. And I kind of smiled at her. I said, but I don't understand. You're missing out right now because you're watching too many stocks. And she goes, nope, I can't. I go, can you go down to 20? No, couldn't go down to 20. So, she had her Gideon moment. She failed. I don't think she trades anymore. So I use a personal filter to basically get down from 100 down to my elite 20. And that becomes my, I take the best of the best watch lists that are available through IBD, and then I turn it into something better. So number 3, stop wasting time reviewing charts you'll never trade. So in other words, if I reviewed 100 charts from that initial cut of the stocks to get them from 500 to 100, I'd be watching a lot of charts that I'm just never going to trade. So I know in my mind what patterns I want to trade and that kind of stuff, but still, I can still save time by getting it down further. I do another cut that only 10% of the remaining stocks. So if I have a remaining stocks of, let's say 20, only 2 to 3 of those is going to be really close to an entry action zone where I want to take action. So once I've gotten my list, whittled down from 500 to 100 to 20, now I can start looking at setting my traps. I want to set the traps for where I will take action and let the trades come to me. 1, I review the charts of the remaining 8 to 15 stocks. I enter alerts at entry action price zones where I can, and I'll either enter the alert or I will enter a conditional order to get me into the trade. I have an automated alert trigger that actually triggers off one of my list generation program that I have running on Thinkorswim, and it looks like this. This is really a cool list. I take the let me pull this up really quick. Here we go. I trade a Thinkorswim platform, and what this is basically they call this a scan. Okay, I have I've loaded up my watch list. In this particular case, it is one of my elite watch lists where I capture every stock that appears on the IBD 50 for the year. So I'm up to about 175 stocks so far this year that have been on the list. And then I have some criteria. Now this criteria here that I'm looking at is I want to find stocks that are in the process of pulling back to the 34 period or 34-day moving average. And so I'm looking for something that is below the 8-day, above the 34, and here's the list I want to sort on. And then I just go over here and I click scan. I hope this works out. So I scan it, and there we go. So this now provides me a list. So I took my 175 stocks. Now I have only 18 stocks they have to look at. And what I do is I set this up on an alert system, and it sends me an alert and says, hey, these stocks, like here's CDW, Trex, it sends me an email alert saying these stocks have met your criteria for pulling back to the 34-day moving average. I have to take no action until I get that alert. So pretty cool beans, eh? So that was number 4. And lastly, journal to remember what to do when your alerts are hit. Are you going to buy the stock? Are you going to do a option trade or whatever? So lastly, and this one's really funny. If you don't watch any lists, don't watch any lists. Don't trade stocks at all. You go, what? What's this? There are certain tools that have been provided to us over the last few years of entities that trade like a stock. They're called ETFs. Then we have basically the non-leverage and the leverage ETFs. And if you choose the right ones, basically you can just hone in and concentrate on 1 or 2 of these ETFs and they'll do really well for you. Here's one that we follow all the time for our premium members. It's called LABU, and it's part of our Magnificent 7 ETF stable that we follow for our premium members. And as you can see, over this 2-year period, there were 5 different runs of 76% or more. And I'm not saying you're going to capture all that 76%. That would be foolish for me to say that. However, if we capture just the midsection of that, that's going to be over 35%. Think about how that would compound out. So again, this is another tool that can be used that will help save time on the weekend for the things you really want to be doing. So lastly, just a real quick recap. 1, stop searching for the next Amazon. Number 2, once you've got your list of proven stocks, fire 80% of them. Stop wasting time reviewing charts you'll never trade. And 4, set the traps. And lastly, don't trade stocks at all. So if you'd like to basically get access to my elite weekly watch list that's updated weekly, go to www.activetrendtrading.com. If you do and register with us, it's free. We're going to send you a copy of a report called the Magnificent 7 ETFs. So it kind of highlights the ETFs that we do trade and we do track for our premium members. So, hey, thanks for tuning in. And if you are not a subscriber to this YouTube channel, Market Tech Talk, please hit the little red button that says subscribe and go see us over on our website. So until later, aloha, God bless everybody.